Hello, welcome to the Executive 8, where we ask top executives 8 big questions. I'm David Sham with Adam James International, and I'm joined by Scott Trench, the CEO and President of BiggerPockets. Scott, thank you for joining us.
Thanks for having me.
Yeah, absolutely. So to start off, for those watching who aren't really familiar with BiggerPockets, what is your primary line of business?
Yeah, so we are a real estate investing community that helps ordinary Americans, most of our users are between $50,000 and $200,000 a year, purchase rental real estate like single-family rentals, duplexes, triplexes, and quads, manage them, and generate passive income and build long-term wealth. And we monetize, we make money in 3 primary ways. One, we have a subscription business, a pro membership, that gives investors access to tools like deal analysis calculators. We've negotiated discounts on their behalf with major service providers. We allow them to promote their businesses and themselves and their brands through our pro membership. And then we offer landlord leases, state-by-state leases and landlord forms to help them manage their tenant relationships. The second line of business is a publishing business. We're actually one of the largest independent book publishers in the country. I think we've got 17 titles now. And our last line of business is advertising and lead generation, which we think is a big part of our future going forward, where we connect users with service professionals like agents and lenders that can help them scale their businesses.
Awesome. And into your responsibilities as CEO and President, one of those is to plan and execute on the strategy of the strategic direction overall of BiggerPockets. So can you tell me a little bit about your process for evaluating new opportunities and new directions as you identify them?
Sure. So there's a little, I'll spend about a minute on this question. There's 4 things that I go through to kind of think about strategic goals and directions. The first is kind of our just North Star as a company, which is how do we help our users generate as much private wealth and cash flow as possible. Specifically, our goal is to help 1 million ordinary Americans build $1 million in wealth between equity and cash flow in real estate. So all of our decisions have to support that overall North Star and our mission's purpose. From there, we have 3 value drivers that we think are critical to our long-term success. The first is reach. How many of the people who are interested in buying real estate are we reaching on an annual basis, and what is their opinion of BiggerPockets? We want 100% of the people in this country who are digitally native, who are interested in real estate investing, to know BiggerPockets and to have a favorable opinion of us. The second value driver is engagement. We want those people to come on our platform, sign up for a free membership, and then we will diagnose where they are in the investment journey, what their biggest problems are, and deliver a free set of solutions to those problems in the context of where they are in their investment journey, driving engagement and retention with our website. And then lastly is monetization. Of course, we are a business and need to be profitable and drive revenue. And so our decisions around that are based on what are the best long-term potential monetization strategies that do not conflict with our mission. How do we scale with the user success that we're generating?
Yeah, I think that's really powerful, of tying everything back into your users, making sure that experience is as strong as possible. And kind of the next piece of this, when you're considering talent needs at BiggerPockets, what are some of the most important attributes that you look for in a person that you're potentially bringing on?
Yeah, so the first one is obviously skill set, and that's where we have to do a variety of vetting and make sure that we're qualified to assess the skill set. So for example, in some cases I'm not qualified to do that. I'm a relatively young CEO, and I don't know what a good CFO looks like, for example, which is why I actually hired Adam James to help us with that search, and they helped us place a great CFO in Roger Metz. So there's the skill set piece, but then once you get beyond that, there's the other qualities, right? Is this person a go-getter? Do they believe in the mission? Are they a culture fit? Are they gonna self-educate to get better over time? Or do they have a bias towards action? Do they employ the scientific method in whatever they're doing? These are kind of the key values that I look for in individuals, and I think that those 3 things: the scientific method, bias toward action, and self-education, are a very powerful trio that help drive long-term results, because you're constantly getting better and experimenting with that without a sense of crazy pride about any one of your ideas. It's all scientific. It's all hypothesis.
Yeah, that's great. And When you came on to BiggerPockets in 2014, it was still in the startup stage of the business. So were there any fears or hesitations for you kind of coming on board? And if so, how did you overcome those?
Sure. So I joined BiggerPockets when I was 24 years old in 2014. And at the time, I had saved up about $15,000 or $20,000 and was living on $20,000 or $25,000, living very, very cheaply. And that personal financial position, I think, is what gave me the comfort and confidence to go and join not a startup, but an early stage company with 2 other employees. It was me, the founder, and 1 other employee when I joined, and feel very confident about that and the potential. In addition to that, I was a fan of the BiggerPockets brand and really believed in what the mission was. I was following it and looking to invest in real estate and build wealth for myself. And so all of those things, I think, were big comforts. And then, of course, once we joined and I started learning the workings of the business, I immediately became incredibly optimistic and enthusiastic about the future of the business.
Yeah, that's a great transition. I'm sure that's exactly what you would hope for,
Yes.
coming from fear to just enthusiasm, excitement for the opportunity. And speaking of excitement, you have a following that is very, very excited, and it's just a very strong and passionate group of people. Some of them will probably watch this. How did you build that following, and what do you do to keep them engaged on an ongoing basis?
Yeah, the community, I can speak to this a little bit, having gone through this as a community member before becoming an employee. BiggerPockets is part of this overall financial independence, retire early movement. And the idea is that if I can save a lot of money or spend very little of my active income and redeploy that in assets like stocks, real estate, small businesses, side projects, we call it side hustles, whatever I can do to build supplementary or alternative streams of income to my wage income, I can free myself from dependence on somebody else or on a job long term. And that's a really powerful concept for a lot of people. It was incredibly powerful for me. It was a life-changing revelation that occurred, not just from BiggerPockets, but from a couple of other contributors in the financial independence community. And so our users are really buying into that lifestyle goal, and we're trying to do everything we can to support them. And I think that's how we get such a strong community, is everything we're doing is trying to help them succeed in terms of that goal. And then, of course, real estate investing in particular, it's not the only way to achieve financial freedom or build wealth, but it's a very powerful way for people in that income bracket, the $50,000 to $200,000 a year wage earner income bracket, because they can get great access to financing and mortgages and loans, those kinds of things.
And you've now been at BiggerPockets for about 6 years.
Mm-hmm.
So going forward, what do you see as the future of BiggerPockets and the direction that the company is heading?
Sure. So the first, we're going to continue to march towards those 4 value drivers that I described earlier. The North Star of helping our users and community build $1 million in net worth for 1 million individuals, and then the second, where we're going in the future for the second value driver, which is reach, is we're going to attempt to reach all 8 million people in this country who either currently own real estate and are under the age of 55, or the 4 million people. The other half of that is the people who are aspiring to become real estate investors. At the same time, we want to help make real estate investing more accessible and less scary to the masses so that we can expand the market of potential real estate investors and get more and more people interested and accessible to this. So what we're doing there is we're going to continue launching new podcasts, and we're going to try to segment our audience. So for example, we have a very popular real estate podcast, but the hosts there are now very successful and own lots of property. So we're going to allow that show to pivot to be a more advanced real estate discussion, and we're introducing a new real estate rookie podcast. And so we'll begin introducing more and more types of content around that are more niche, so that investors that have more specific interests can really dive deeper on the topics that they're interested in. On the second phase, we I think in early 2020, still don't quite do the best job of diagnosing our investors when they join BiggerPockets and then giving them solutions and context to those problems in a personalized way. And so that's going to be a major focus over the next 2 years. We're going to invest very heavily in our product to help the product solve the problems of investors. That was the second value driver, that engagement piece. And then on the revenue piece, we think the future is in, we deliver value to our users when they buy property that they believe will advance their financial position and move them towards financial freedom. that's also when money changes hands in the real estate industry. So our big plan over there is we think that in addition to growing our pro membership, adding value, reducing churn, and just generally having that be more helpful to our users, we think lead generation is a really powerful way for us to align our economics with value delivery to our users. So when a user is ready to buy a property, we connect them with an agent, and that agent becomes our customer, not our user. We're doing a high quality connection with an investor-friendly agent, and we receive a split of the commission or a marketing fee. And then same thing with the lender connection. There's a lot of other connections that happen around a transaction point, like the hiring of an inspector, an appraiser, property managers, major rehab projects, all those types of things. But we think lenders and agents in the short term are really the two big markets that we can work with to help our users succeed and align our economics.
Yeah, it sounds like a great direction, things to look forward to in the near future. And so the next question, a lot of people talk about writing a book. I mean, it comes across everybody's mind, but then you went out and you actually did it with Set for Life. How did you decide to write a book, or what made you decide to write a book, and what was the most rewarding part of that journey?
Sure. So a lot of people come into real estate, or they come to BiggerPockets and they say, how do I get started in real estate? I don't have any cash, I don't have good credit, and I don't have a strong income. And yes, you can invest in real estate without those things, but I'm a pretty dogmatic guy, and I think you should have a good savings rate, and you should build a strong financial foundation with good credit, a cash stockpile, a high savings rate. And I thought that particularly for young people, this is something that you can have a large degree of control over in your 20s and 30s to build a financial position capable of sustaining large investments like those in real estate. And my book in particular is one of the portfolio of BiggerPockets Publishing, and it's aimed towards that person who's just starting out in their career or just with wealth building in general. And I outline the wealth creation process into 3 phases. The savings phase, where you accumulate that first year of liquidity. What does that mean? If my lifestyle costs $50,000, I'll need to accumulate $50,000 in liquidity to feel very comfortable and flexible about making decisions over the next year. Then it's about generating more income and thinking about that first real estate investment in the next phase. And then the last phase is scaling and continuing to accumulate large amounts of capital, but investing that in assets. As you accumulate a larger investment base, investments in general are more important relative to your financial position. Getting a 10% return on $1,000 isn't meaningful. Getting a 10% return on $100,000 can be very meaningful. So that was why I wrote the book, is to help people frame that journey from a position of 0 assets and a median income.
Awesome. And one of the last questions, just in general, do you have any high-level insights for us on the current state of the real estate market?
Yeah, so I like to think about the real estate market in 2 ways. There's the individuals who invest in the market, and then there are the properties themselves. And so if we take those 2 markets separately, we believe there are 19 million people in this country who either currently own property or are aspiring to invest. 11 million of that 19 are people who, 15 million people currently own property. 11 million of them are over the age of 55 and not digitally native. And BiggerPockets really does not reach that older market. So that's most of the real estate investors in this country that we do not currently reach because they're not digitally native. While we have some plans to kind of work with that market, we really think what's going to happen over the next couple of decades is the real estate investing population is going to age in to that digitally native cohort, right? The folks who are digitally native now will get older and remain digitally native as younger investors who are willing and eager to learn online will begin entering the market. So we think that the market of individuals who are digitally native is going to expand dramatically because of natural demographic trends and because of the expansion of the market that we're trying to create and help people break into this field that I mentioned earlier. The second thing to think about in terms of the real estate market is the properties themselves. So our space is really that single family rental, duplex, triplex, and quadplex. Now why is that? Well, the reason for those 1 to 4 units is because a wage earner earning $50,000 to $200,000 a year can get a fixed 30-year Fannie Mae mortgage on very good terms with a low interest rate, and that becomes much more difficult when you move into the 5+ unit residential or commercial real estate space. So often the folks buying that larger property or the commercial property are a little bit more sophisticated or a little bit more wealthy in general than your upper middle class income earner. And they're typically working with commercial brokers or going elsewhere to get that information. Not to say that we don't serve them, but I would say that's not the heart of our business right now. So what's happening in that single family rental, duplex, triplex, and quadplex market? Well, first of all, housing stock in this country is converting from single family owner occupied to single family rental. And it's converting at an accelerating rate. Most net new households formed in the last decade are renter households. You got a rise of high income renters. And that property, that single family rental housing stock, is overwhelmingly owned by people like those on BiggerPockets. 80% of single family rental homes are owned by investors with 10 or fewer units, and 60% of that stock is owned by investors with just 1 or 2 properties outside of their primary residences. The institutional player like Invitation Homes buying 10, 20,000 houses in Atlanta, they are actually non-factors in the market, even though they make the headlines. Less than 1 to 2% of single-family rentals are owned by the big boys in that institutional space. And again, I think that's largely due to that financing advantage, where a small-time landlord like myself can get access to a great mortgage that I think is unavailable to the institutional players or the folks with dozens or hundreds of units. And I extrapolate a similar trend in that duplex, triplex, and quadplex space. So what's happening in the market? That's a long-winded answer, but you've got a rise in a compounding increase in the rise of a compounding increase in the number of digitally native real estate investors. You've got a conversion of single-family housing stock from owner-occupied to rental housing stock, and you've got nearly all of that ownership, all of that activity being done by investors who own 10 or fewer units. And so that's the space that we play in, and we see those trends kind of continuing over the long term, and that's the market that we're going to play in and operate in.
Yeah, those are great free insights from an industry expert that we get to take away. And so bonus question, for anybody who's interested in what BiggerPockets is doing and what the brand has going for it, where would you direct them to get more information, to get more plugged into BiggerPockets?
Yeah, I think if you're interested in learning how to purchase investment real estate and want to build a portfolio, the beauty about BiggerPockets is you can come on and you're not going to hear my opinion. You're going to hear the opinion of 20 people who are experts in real estate who are debating different ways to succeed. So if you like that debate, go on the forums. If you just want to passively absorb information from a variety of different perspectives, the podcast can be a great way to do that while you're driving to work or at the gym. If you like to learn more hands-on, we have videos on YouTube that will walk you through some of the more complicated subjects. And if you like a book and a professionalized formatted approach that walks you through how to succeed in a given strategy, niche, or topic, then you can check out our bookstore. All of these things can be found on BiggerPockets.com, and our drop-down menu will direct you right to whatever you're looking for on those.
Yeah, that's awesome. I mean, that's a really wide range list of resources, so there's something for everybody. Great. Well, Scott, thank you for joining us so much. We were happy to have you. Thank you for watching, and we will see you next time on The Executive 8.
Thank you.